Well, hey, real estate fans, welcome back to the weekly podcast. And today I have my friend Tu Phan from Fairway Mortgage. He's going to join us because there's a lot of new cool stuff happening, isn't there, in the lender world?
Well, thanks for having me, Alice. Excited to be here. Yes, a lot is going on. It's a crazy time in the market. Depends on your observation and your purview, but thanks for having me on. What can I do for you today? How can I answer?
Well, I know you're super busy, so thanks for jumping in. But I think all of our listeners are going to really groove on this. There's some fun stuff happening with the multifamily world, and that's a big part of what we're doing down here in Southern Oregon. How about you speak to that?
Wow, thanks for bringing that up. Yes, Fannie Mae beginning with their next release or their update, as they say, in mid-November. I'm going to say shortly after the 18th or 20th of November. Um, Fannie Mae is updating their primary residence owner occupied, as we call it, multi-unit purchases, where you can put as little as 5% down on a multi-unit purchase up to 4-unit property. So if you're looking at a fourplex, you can actually buy it with 5% down. And what's even more crazy, people don't, and we'll get into the loan limits, but this is the exciting piece. The loan limit on a 4-unit property nationally is $1.4 million, 1.442600.
What does that mean exactly?
So basically, that is a conforming loan amount if you're buying a fourplex.
you
So
can you can spend that much money?
if you qualify, obviously it's if you qualify. So traditionally, when we talk about loan limits, let's just dive into it. Fairway just recently increased their loan limits to $750,000 in line with a couple other lenders locally or nationally in the industry. And what that means is the current loan limit is 726,200. We've increased it to 750,000 in anticipation of the loan limits going up. So what that means to our buyers is they're buying a home and instead of borrowing 726,200, they actually can borrow 750,000 and still be considered a conventional loan.
Wow. So what you're talking about, I don't think people realize there's two ceilings. There's the personal finance ceiling and then the lender ceiling. That's what you're talking about.
Correct. So you hit it on the nose, the loan limit ceiling. So with each unit property, single family lending, there's 1 unit, duplexes, 2-unit, triplex, 3-unit, fourplex, 4 units. So with that said, each of them has their own loan limit tier. And a lot of people miss it and think, oh, it's the 726 or the 750 number, the new number. And without realizing if they are, in fact, let's just say looking at a fourplex for 1.5 million, they only have to put down 62,000 or 5% of that.
That's shocking.
And still have a conventional loan.
Wow. And so what happens if it's not a conventional loan? Like we're saying you'll still have a conventional loan. Otherwise it would be what?
It would be a jumbo and basically what we call a non-conforming loan. So anything
Oh,
above
I
the
see.
conventional loan limits.
Okay. Okay. So wow. Those are so many zeros.
Yes, it is.
So is that an Oregon thing? Is that a regional thing?
No, it's a national thing. So nationally, these are the new loan limits. And once again, let me put in an asterisk. Shortly after Thanksgiving, the FHFA will formally increase rates, or excuse me, increase loan limits. And keep in mind that 750 number could be higher, it could be lower. But based on everything we understand in the marketplace, it will be probably slightly higher. So this adjustment upward by a few lenders is anticipation of the mortgage or loan limit increases.
Wow, that is exciting and scary at the same time. So I bet a lot of people's neighborhoods in the United States do have that many zeros for their multifamily.
You are correct. And I believe in Medford as well that you're in what's the average multi-unit sales price?
They're hard if you can find one. See, that's the thing. So we've got probably 200 a door, maybe more. So
Okay.
that would put duplexes at like 450, sometimes 500 if they're newer construction. And so that would put a A fourplex. Yeah, I guess so. Cause it'd be 800 to $1 million. So, and then how do you qualify the rents for that? So let's say you have somebody who wants to live in one,
Mhm.
then what?
So basically, let's use the fourplex as the example. Rule of thumb is based on the proposed rents, existing rents is what we look at first. And then if they're not in place, then the appraiser will provide us proposed rents on each unit. And then we'll take 75% of that proposed rent amount, factoring in maintenance and vacancies.
And that's part of your qualification.
Correct. So basically that 75% in income can further help qualify the borrower in purchasing.
Wow. That's what they call looking good on paper.
Yes.
How fun. That's pretty exciting news. And that's a big, big change.
It's a big jump. Significant jump, if people been around, they understand that the rule of thumb for fourplexes or multi-units has always been at least 15 to, for a duplex to 25% for a fourplex. So this is a significant move on behalf of Fannie Mae to bring in more buyers into owner-occupied buyers, into the multi-unit space.
Because they don't want to support investors.
Well,
which is okay. We understand. That's where the 20-25% comes in, right?
Yes.
If you're not going to live there. So, let's talk about renovation, because Fairway is great at renovation loans.
Well, thank you. Yes, we have a fantastic renovation program. Let me lend to you first that it is our own program. It's in-house, and it is basically based off of Fannie and Freddie's.
Oh, I didn't know that. That's in-house. Okay.
So, Fairway actually closes it and processes it. We're not outsourcing it. We're managing it. So it is our own, in this case, conventional, Fannie Mae's home style, Freddie Mac's choice renovation, as well as FHA's 203K. We do the limited is what they used to call it, and the full renovation loans as well. We do provide one thing to keep in mind that a lot of people don't realize is we do have a VA renovation as well.
Really?
We do.
Okay, well let's go there because that's super exciting. What does that look like to the buyer?
Yeah.
What can you do with it?
It's very similar to, and I would equate it to more of an FHA limited type renovation loan. So nothing major, but more cosmetic and energy efficient repairs. The key here with the VA piece is it's capped at $50,000 for the renovation. So if the borrower only has about $50,000 in a renovation cost, you can go the VA route. Excuse me.
God bless you. So if you have more than 50,000, then you just look at a different program or a different house.
A combination of both, or yes, you're right, a renovation, conventional or FHA. But if they're a veteran and they just need some, up to, in this case, 50,000 in cosmetic repairs, that would be a great program for them.
So does that renovation program work? We have a lot of double wides on land in Southern Oregon. It's real common. Is that a program that would work on a double wide if it was on land, not in a park?
Great question. We do offer it on manufactured homes. I'm not even going to say it's a case-by-case basis. It's something that we need to look at. Hopefully, what they're asking to do is nothing. You're not altering the structure itself.
So like windows and a roof.
Yeah, it's very limited. If you think about it, from an engineering standpoint, on a manufactured home, you probably don't want to alter a manufactured home too much.
No. Could you build a shop?
An ADU or a shop, yes.
So you could use the VA. Wait a minute, the VA renovation loan. You could use that to build another building. Like
strike that. We might want to strike that. I need to confirm that. I think it's mainly just on the VA renovation loan. It's just mainly cosmetic renovations.
Okay. But the other renovation loans you can build, right? You can build garages and shops and
So 203K renovation. Yeah.
Let's talk about the conventional renovation because that's more fun.
Yes.
So and what kind of buildings can you add with that?
So my experience, we've added ADUs and we're talking detached ADUs as well, depending on, the question is how big can you build? It really depends on the local jurisdiction and the requirements for ADUs in your respective city, municipalities, et cetera. But for the purpose of the renovation loan, yes, you can add an ADU, a full-blown, detached ADU that some people want to Airbnb. Yeah, absolutely.
Wow. Wow. So how do you qualify for that? Is that different?
No, the qualification process is exactly the same as any other loan. And the difference here is, remember, with a renovation loan, you have whatever you qualify for, that inclusive of that dollar amount is what you can build into your renovation cost. Good example, if you're qualified for a $500,000 loan, all right, and you purchase a home for 400,000, potentially there's $100,000 in renovations you can build into that loan because you qualify for that $500,000 loan limit or loan amount.
That's pretty cool. That's pretty cool. So if you can build an ADU, then you could certainly build a shop with that money.
Yes. Yes,
Yeah.
absolutely. Absolutely.
Wow. 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 That is super cool. So, yeah, I think renovation is the way to go, but hardly anybody agrees with me.
They're great for this current market if you have properties that have sat on the market for a long time, if agents are trying to find ways to sell their properties or they're
Mhm.
just not very desirable.
Mhm.
If you can, basically paint as some painters do, paint the picture for the buyer, what it might look like if they added $50,000 in renovation, perhaps that would work. That would convince a buyer, a first-time home buyer at that, to go all in on a renovation.
Yeah, my first introduction to renovation was during the crash, the big one, like the 08, 09. And I watched one of my clients do it, and they just did windows and a roof and a central heating system. And it was quite remarkable. And they got theirs done in like 2 or 3 months.
Mhm.
And they weren't nervous at all. But everybody after that, it was like, oh, I don't know if I want to do that.
uh, I can't dismiss the stress and anxiety behind the whole process of renovating or building. We know that exists, but for the most part, it's a great tool potentially to build equity and make the home the way you want it to be, and
Hmm.
have it move in with the nice amenities. A lot of home buyers who I would say who have some imagination can look at an older home and say, hey, I want all those fine finishes or fancy finishes. They can do that. You just have
Hmm.
to find the right home and pair it with a renovation loan, and boom.
Hmm. And I should knock wood, but every time I've watched one of these or done one of these, 100% so far, knock wood, the property's been worth more than what it appraised for when we started. So it's been pretty lucrative, but it is market specific, isn't it?
It is, but there's homes in every single market that would fit nicely into a renovation loan.
So
And
what
there,
about this new multifamily owner occupied thing?
yes, you can do those on a renovation loan as well.
Can you really? Wow.
And
Wow.
so
Well, you're
once
going to
again,
be
we're waiting till the Fannie Mae updates their guidelines, but yes,
well,
those
that's
will be
just a few
applicable.
weeks. You won't have to wait long. How exciting. We'll have to have you back and see how many people did it this winter.
Absolutely.
So what do you think is going to happen with our market? We're asking everybody this time of year. We're getting into, third quarter, first quarter 24. What do you think is going to happen with the housing market?
The housing market's resilient overall, as we know. You've been in it a long time. I think this is certainly a season, as someone would call it. Interest rates are a little bit higher, and so with that said, the buyers are a little bit less and far in between, but there is a lack of inventory as well. So with that said, I don't believe home prices, the fear has been said, home prices are going down, as you noted. Do you think there's a crash? I don't believe there's a crash coming. I believe the market will be resilient. We're facing a downtime right now. Home prices are probably flat, if anything. Statistics actually show that they're increasing year over year about 3 or 4%. If interest rates continue to go up, we might see that decrease just a little bit. But for the most part, what's keeping it right at those levels is the lack of inventory nationally and in specific markets. So I don't see the market doing anything crazy. I believe homeowners and home buyers who want to buy right now are buying, regardless of interest rates. And some of them have unique situations that they're in as well, and they're having to buy or having to sell. So
Mhm.
based on that, I'm optimistic that the market will be fine. Hopeful that the spring market brings, cross your fingers, a reprieve in interest rates so that we see more home buyers.
Yeah, even just a little bit. Are the number of people getting qualified? Because that's something that gets tracked nationally. You have a name for it. Is it applications?
Yeah.
Yes, that mortgage
Yes.
application.
Mortgage
How's that?
application.
Yeah, how's that going?
They're certainly down, obviously driven by interest rates, but there is a sector of the market that is actively still wanting to buy, still wanting to apply, and finding out what they qualify for.
Mhm.
And a lot of them, over the past several years, starting with the pandemic, a lot of them were priced out of the market because of the increase in home prices. So, you're asking me questions. What do you think will happen, based on the current market? Will home affordability return based on interest rates going up?
So I think about that a lot. And I think that if the interest rates go down too much or go down too much too fast, then that's the feeding frenzy, the price thing is going to go up, at least in our area, because we're kind of this lifestyle destination. And so we have all this open space. And as the world gets weirder, we get more of the world because they feel comfortable, safe, and that. But if it turns out that it only goes down a little bit, I think we just get normalcy. Like maybe we would actually see that 4 to 6 month turnover for people selling their houses, and maybe we would see more listings. I think people are nervous right now.
It's natural. A lot of people in our market, I'm going to say this because I say this a lot to a lot of borrowers, is as well as agents, is that we've been spoiled the last the last 10 years. Interest
Mhm.
rates have been historically low. And since they've gone up and since the Fed has adjusted upwards, people are like, oh my gosh, this has never been the case. I'm like, yes, this is just, you know, direction to a normal market that we were accustomed to prior to all these years of low interest rates, as well as what the Fed would say is quantitative easing.
Yeah, they do like their big words. So how are you and your buyers adjusting to the interest rate? Like if somebody came into the housing market in May or June and got qualified and they still haven't found a house, how are they adjusting and how are you guys adjusting?
I, here's the thing: everybody's adjusting based on their purview of do they want to buy now or wait. My experience so far with home buyers is that a lot of them have the interest rate shock and continue to have the interest rate shock. Um, I wouldn't call it a tough hurdle. It's more of back to the conversation. What can you afford? What do you want your payment to be? And based on that, work backwards and say, okay, this is what we need to look at to keep your payment in this category, this loan amount, or this purchase price.
So are
So
they deciding to pull the trigger or are they waiting?
they are, a lot of them have decided, you know what, the rates are the rates. Their situation's unique. Either they've been renting, they want to be out, they want out. Certain parts of my location up here in the Northwest, certain people want out of certain neighborhoods. And so they will make the adjustments sooner than later.
It was very diplomatic. So the other thing is, how many of the buyers that are working with you guys are understanding the equity opportunity that if you buy now on this little dip, when things do turn around, you're going to have a nice little wealth building exercise there.
That's a great point. I bring that up to all the buyers that are getting pre-approved. My response to them with the interest rate conversation early on when the Fed started increasing rates, many lenders, inclusive of myself, we would interject, oh, you can refinance. But as the year has drawn on and rates have continued to go up, I've really gone away from that conversation of refinancing. Yes, a borrower can always refinance when they want to or when the rates come down. But the reality is, we're in the current market. Let's look at the things that we can control. In this case, if you can control what your payment can be, that will be your response to what your actual, amount that you can qualify for. So,
and I think that's a really good point that gets overlooked, because this idea of you're going to refinance in the future, you're assuming that your financials will be such that even with lower interest rate, you can refinance. Life can be somewhat, surprising.
As optimistic as I usually am, I'd love to see the market change, and I love to see, a lot of lenders and banks would love to see the refinances come in with lower interest rates. But we're in the current market, and like, to answer your question about home buyers, the ones that want to buy, like you said, when they are ready to refinance, you're right. That's when they can realize the equity they have. But if they're not in the game, to kind of come full circle on the question, they're not in the game and they don't own a home, there's nothing to refinance.
Yeah.
There's no
I
equity
have
to be had.
some buyers that have been waiting for a crash for 5 years. So COVID was 3 years ago. So they started waiting right before COVID, then COVID, and they're still waiting. They're still renting. And anybody who pulled the trigger 5 years ago, at least in our neighborhood, they have like $50,000 to $100,000 in equity.
Yeah.
Yeah. We don't always see that, but yeah, just it's, and we're not pushy people, right? We're not going to make,
No.
a big argument for somebody to buy something if they don't feel ready. But boy, I mean, the prices, they're just a little bit down, and it's super exciting because it makes it a lot more available to other buyers.
Yeah. The affordability factor is starting to come back a little bit. I'm not saying it's back by any means, but there are pockets just in Oregon where you can purchase a home and it still be affordable to the monthly payment. And that, like I said, one of the things I concentrate with buyers is, what are you comfortable in paying first? Because that's what they're stuck with paying. And obviously, the other plug is, if some of them know they have jobs where they'll get pay increases or life circumstances change in a year or 2 years, we can also look at a 1-0 buy down, a 2-1 buy down, or a 3-1 buy down.
What does that mean?
So basically, in turn, you're basically lowering your payment for the respective first 12 months, 24 months, or 3 years of a mortgage, typically funded by hopefully a seller buy down. So really, go ahead.
No, go ahead.
So basically, a simple 2-1 buy down is, let's say the start rate, the actual rate is 8%. You're buying the first year's rate down to 6%. So your payment for the first 12 months is based on an interest rate of 6%. And the second year, the interest rate is based on an interest rate of 7%. That's your principal interest payment. And so what's collected up front in the form of an escrow account is the buy down, and which is covering the difference between, in this case, the actual interest payment between 6% and 8% the first 12 months, and the respective 7 and 8% in the next 12 months. And in this case, if we ask the seller to fund the buy down, that buy down gets set aside in an escrow account. And each month, as the buyer makes their payment, they make the smaller payment at the 6%, and that difference from 8% to 6% is deducted from the escrow account.
Well, that's cool. So, but they're qualified at the higher rate. Is that
Correct.
right? Yeah. Okay. So
this is
like
really just giving relief to the buyer
temporarily.
if they're payment conscious. So
yeah, but it's that first year that's the hardest, right?
It usually for first time home buyers, yeah. But one of the things I at least like to remind buyers is, whether we do a 2-1 or a 1-0 buy down, will you be comfortable with the payment when the rate's fully at 8%? That whether the seller, because in that instance, I also let the borrower know, maybe we also look at a permanent buy down as opposed to just a 2-1 buy down or a 1-0 buy down. But the more options the borrower has, or the buyer has in this market, or more information, helps them say, okay, I can afford this.
Well, I think Fairway's been really great about having programs as quickly as possible and being creative. So it's one of the reasons we love you guys
Well, thank you. Yeah.
and the renovation.
No, we are, obviously we want to cater to the buyers and provide as many products as possible. Obviously, closing is essential for us and ensuring that everybody's super happy in the process as well.
Well, and all that great news about the multifamily down payment and the loan limits. That's great. So I so appreciate you talking to us today. How do people get a hold of you if they want to talk more?
They can find me on the web at tuphan.com, TUPHAN, or they can call me at 503-780-6872. You can cut that out.
And he answers his phone.
Yes, available. I'm not going to say 24/7.
No, I think your family would have a cow, as they should. But and you can text, right?
Yes, call, text, or email.
Great. Well, I hope you'll come back on again in a few months and give us another update on kind of what's going on in all those different categories.
Well, thanks for having me, Alice. Hopefully this was helpful for at least one person.
Well, I'm sure it was for everybody. So thanks again. Have a beautiful week,
You too.
everybody.
Thanks, Alice. Bye-bye.